The consistency in leads as well, right? It's having, in my opinion, Lincoln has the best direct mail lead piece out there. Comes with a pre-approach letter. So not only do they send the lead piece that says final expense life insurance, they put a pre-approach letter letting the client know, hey, an agent's going to come out and see you. And so that tightens up every single lead piece and makes it easy. And we know, like, for field sales, direct mail is king, right? Like, TV is nice and it converts really high, but direct mail, if you're going to be successful in this industry, working face to face, you have to have consistent direct mail.
Yeah, it's the most consistent form of marketing that we have is direct mail.
It's the highest converting, highest shelf life. You know what I mean? If you can't get out there for 2 weeks, those leads aren't dead. If you're working internet leads, the statistic is that if you contact, if it's after 5 minutes, if it's 5 to 10 minutes, the chances of you converting that lead or even qualifying that lead, and this is a Harvard study, it goes down 400%, right? Direct mail, how many times have you sold a direct mail that's 6 weeks, 8 weeks, 6 months old, right? You've got the person's handwriting right there.
Yeah. The whole thing is that Lincoln has a vested interest in you converting their leads. It's different. So when you go to lead vendors, different types of leads, obviously the lead vendors want you to be successful with their leads so they can continue to sell you leads. But that's how they make their money, is by selling you leads, right? So you're the product. Again, you're the consumer for them. So with Lincoln, it's a little bit different. They have a vested interest in you converting the leads. They make their money off the policy sold. Yeah. A lead vendor is never going to lose money on selling leads, but Lincoln will. They lose money. Yeah, and not just Lincoln, but the managers do too.
What'd you lose last year?
I don't know if it would be a loss, but I invested probably maybe, I don't know, $250,000 in leads.
So it's $250,000, $250,000. But that's the reason too that you've been so successful, is you're willing to put that money back into your agency.
It's all for the benefit of the agent. Like I said, I've been doing this for 20 years. When we first started, nobody financed leads. To be honest with you, there really wasn't too many leads.
The pink leads?
Yeah, the pink leads, the Social Security lead. They used to call them press one leads, because anyone that was waiting on hold, contacting the Social Security office, they would have to press one if they're interested in life insurance. Yeah, so they would call them press one leads.
Was that the same? Because I remember hearing about. I remember the pink leads, and then they had a sweepstakes. The sweepstakes leads as well, and they're terrible. I remember your dad saying.
Yeah, the lead program kind of has evolved really over the last 20 years to be the pinnacle of lead generation right now, and how it is. They spend a lot of money generating these leads and finding the best quality leads that convert the highest. But just the way that we do our lead program already gives an advantage to our agents, because normally for the last 100 years, how things have worked is agents are brokers. They're appointed to a bunch of different companies, and you get your leads yourself or you buy them from vendors. When there was a new way to do leads, the company fell into it. They're like, you know what, we're going to generate it ourselves. We know we can do it better. We know that we have more interest in our agents closing deals than the lead vendors do. And then they decided to finance it. So the way that we work our leads is, okay, so as an agent, let's say that you make an extra $500, right? You're going to invest that $500 in buying more leads. You can make more sales. The way that we do our leads, the managers collateralize the leads. I can order $200,000 worth of leads in a single month, and then I put it on a big old list, and my agents can call in and pick leads at their whim. It's better than an agent having to come out of pocket for their own leads and be at the whim of the lead vendor sending it in, and then taking all the risk. So with us, the manager takes the risk, and which is fine, because I've been doing this 20 years. Yeah. I've got millions of dollars in renewals coming in. I make plenty of money. I can take the loss. Yeah. So it's easier for my agents to be able to call in and just pick off the list. They don't have to worry about picking a specific area, waiting for 5 weeks for it to come in. I order every week.
And that's the thing too, is you're talking 3 to 5 weeks to get those leads. So you're ordering 3 to 5 weeks every week before you get your first lead.
Yeah, you can spend $5,000 ordering leads before you even get one in to make a sale.
And then what happens, let's say you're 6-7 months in, and with a lot of carriers, you have a couple deaths, you have a couple lapses. Now, with anyone else, the majority of companies don't finance leads, but a lot of the ones that do, they're going to make you repay 100% of your chargeback. So that means you might work a week or two. I've had guys work a month and not get paid a single dime because I had to repay it.
Yeah, these are normal problems that have been going on for many years. But Lincoln's just been around so long, and our agency and Gold Memorial has been around so long, that we understand what the agent needs. That's the whole reason why we finance the leads. You can go out for a week, and maybe not a week, but you can have a bad few days and not make any money. And the last thing we want is one of our agents to not have money to buy leads, so we finance them. Yeah. And they take a little bit out of your commissions. And no matter what, every time you sell a policy, you're going to get a deposit. Even if you owe the company $10,000, every single policy you sell, you're going to at least get some money deposited in your bank account.